Governor, you can read out the two responses for receivables and then payables.
Thank you, Chair. On long-standing trade receivables. Trade receivables over 7 years are as listed below. 1, we have the client and the amount. Commercial and industrial customers, amount is 1,823,064.59. Domestic is 253,273,165.75. Government institution 45,409,912. Water kiosk 497,624. 497,624. And for schools 298,267. University colleges 353,267.9. all amount totaling to 301,655,302. For domestic clients, most of the debts were inherited from the defunct municipal council, and the clients are untraceable because of population movement, subdivision of land, and ownership of accounts by tenants. For other accounts, that debts are attributed to standing charges that were being levied by the company regardless of the consumption. For government institutions and schools, there is an ongoing collection effort supported by Annexure 4.1. The management intends to offset customers' deposit with related into outstanding debts. The company intends to write off long outstanding and irrecoverable debts through the CEC Finance and Treasury, County Government of Uasin Gishu, in order to get specific provision for the bad and doubtful debts.
To the second part of that query, which is doubtful recovery of VAT refunds.
Okay, the management response is that the main reason for delayed payment totaling 44. The doubtful recovery of value-added tax VAT refunds. The VAT refunds were as a result of the changes in tax laws in 2018 that changed the natural water from being a zero rated to tax exempt, making the sale of water not claimable as in input tax. The initial claim was 93,338,325. The company had been proactively monitoring and addressing the issue. Efforts made by the company to the tax agency have not resulted in any negotiable progress. The company commits to intensify efforts in concluding this matter. A summary payment is shown as you see below, that the description and the amount. Opening balance July 2018 was 93,338,335. Amount received 2018-2025 was 33,404,921. Amount disallowed 11,349,181. Closing balance as June 2025 was 48,584,233. The breakdown of VAT refund as follows. There is description, there is an amount, and there is the status. So, July to September 2012, April, June 2013, and January, June 2018. Amount was 15,290,331. Status, the claims can be traced and are under KRA and MST department. And then another description was April, June 2011, January, December 2014, January, September 2015. The amount was 33,293,902. KRA officers have recommended further engagements with the management, all totaling to 48,584,233.
You can proceed to also read the response on payables.
The main reason for delayed payments totaling 44,000,000 353,076 was cash flow. Challenges experienced by the company in the year under review. Also, the company has repayment plan with some suppliers, including WASREP on regulatory levies and WRA levies, which had a dispute in the court. The company's credit policy in 60 days and the difference of 55,770,140 falls within the 2-month credit period and are therefore current. Efforts have been made to reduce the creditors as at 31st December 2025. The outstanding balance for the payable had been reduced from 100,125,216 to 16,275,295 for specific suppliers that were outstanding at the time of audit. This includes 12 million owed to WRA, which is still under legal dispute, and payment plan exceeds on the outstanding of 4,275,295, Annexure 5.
Okay, Auditor, you can comment on all those. I think there are 3 responses. Comment on the 3 responses.
Thank you, Chair. For long outstanding trade receivables, we are still saying the matter has not been addressed, despite the fact that the client has demonstrated the effort they are putting in place. However, for us, they should only be having a receivable that are current. And in terms of the VAT refunds, we are also saying the matter has not been addressed because management has not taken further action to recover VAT refund from KRA. And in the event the refunds are not recoverable, then other appropriate measures should be taken to write off these balances from the books of accounts. And for trade and other payables, the matter is partially addressed because we've seen management has provided sufficient evidence or explanation to fully address the substantial overdue trade payables, and therefore we feel the matter still would be escalated and we'll keep on monitoring. The outstanding amount of 16 million is now manageable. Chair.
I don't know if you have further comment, Governor, before I bring in members.
Let me give the MD to respond.
Thank you, Chair. On long outstanding trade receivables, we are saying that the debts actually are long outstanding over 7 years, and we are in the process actually of identifying the ones which will not be collectible, so that we can be able to write off. And I know it will be, but for the existing, we are doing efforts, and we've been able to collect, and our collection efficiency now is at 106%.
For the write-off, you have said you intend. When do you intend to write off irrecoverable debts?
Yeah.
We've already a time frame.
Sorry. We've already started the process of actually identifying these debts, because we want to do a specific provision for the debts which are not recoverable. So we believe before the end of this financial year, we should have been able to come up with a list that it goes for write-off.
Senator Eddy.
Chair, thank you for the opportunity. You know, Eldoret Water Sanitation Company Limited will be the primate water provision WSP in the city of Eldoret. Therefore, we cannot take it lightly in any measure. This audit query on outstanding trade receivable by the auditor is very specific. If I get it, you have got long outstanding receivables, money owed to you by people of 301 million. And these people have been denoted by the auditor as customers. their customer debts. Whether they've taken 10 years or they've taken 1 year, doesn't matter. It matters that they are your customers. Some of them might be still in your distribution lines, or some of them might not be. But there has to be clear strategy on how this money gets back. Because if you just say that, oh, they are, long-term debts, therefore we write them off, what about if they are conduit for corruption? You cannot write off 301 million just because they have taken so long to collect. Because maybe somebody was using this as a conduit for corruption. They are using the WSP to siphon some money. And the second part of that query is that the management, that is you, and actually written liability, they had a written liability of bad debts provision of 60 million out of this. Saying that there is 60 million that you're claiming that this perhaps warrants a write-off. But the query is there was no justification for that write-off, which qualifies what I've just said. So can you separate these two? Start by telling us why was there a written liability of bad debts on the 60 million? What was the justification for that? Is there a schedule of those debtors of the 60 million and how you justified that for being liably bad debts that warrants being written off? And then subsequently, what happens to the remaining 240 million? Is there a schedule for it as well? Because they are denoted as customers. Do we have a schedule of those customers? And how do they feature in terms of bad debt that could be written off? Because this is a balance sheet problem that must be solved in the dignity that a primate WSP in a city should be taken off. So, Chair, if we may start with the 60 million, what was the justification? And then after that, go to the 240 million balance over the 301 million.
And then, just as you answer that, in your response, you have given a schedule of the receivables, which is totaling to 301 million. But when you go to the annexures, you get the sense that the letters that you have written do not match with the schedule. For example, there is a letter you've written to the county government of Uasin Gishu demanding for 28 million. But that is not reflected there. There is also a letter you've written to Treasury CS demanding for, is it 44 million that was spent on IDPs? But that is not reflected on your schedule because the total government amount is 45 million. But the letters suggest that it is more. Yeah. So can you explain that? I think let's handle that and then we come for another round.
No, it's just related so that
yes.
Mine is just a simple one because I think while this MD was responding, he said some of these debts are historical from those days of the municipal council. So I also wanted him to highlight or itemize and tell us, especially the one on the domestic, how much of this was before devolution, before devolution. So that, those are the ones that maybe now you are saying you want to write them off because you are unable to identify the customers. So it's also good to break down.
That you're answering on behalf of the governor, so the governor should always give you the permission.
Let me give him the permission.
Unless if you have handed over your governorship.
Thank you, Karibu.
Thank you, Chair. To start with the 60 million that we are saying, this 60 million, for clarification, the 60 million we had provided for the previous financial year as a general provision. This financial year under review, we actually brought it back because we wanted to do specific provision. So this is a provision that we had provided, general provision. But we said we cannot do a general provision and we have the specific provision. So we wrote it back so that now we can have a list of the specific provision. The reason why it's taking long is that we don't just want to write off these debts. We want to really follow the PFM Act, identifying the specific and identifying the customers, whether they are still available or whether they can still be collected in any other way. So that's why we are taking long to be able to come up with a specific provision. Chair, the list that we gave of 301 million is debts which are over 7 years. I think that's what we are saying we are actually looking at, that we think that they've been long overdue. So if we talk about the county, the attachment was to show our efforts of actually collecting the outstanding debts, the general outstanding debts. But this specific 301 is relating to the very long outstanding debts. And yes, this is debts which are related to before devolution, especially on these domestics. So these are debts which are very long outstanding.
Have you responded to Senator Eddy?
Yes, the 60 million.
Yes.
Yes, I've said the 60 million, initially we had provided as a general provision.
Okay, so these letters that you have written to government institution, what is the outcome?
The outcome is that the letters that we did is actually some of the amounts were paid, some of them have been paid during this financial year. The one which we wrote to the Attorney General is they've not paid, but we've been promised that it is in the outstanding bills and it will be paid. So we are not considering those government institutions for write-off.
Yeah, but I have a concern with your letters. You know, when you are writing letters to demand your payment, it is called a demand letter. It should not look like a love letter. The letters that you have written, they are too polite to recover anything. I don't know whether you have a legal officer in your company. You have a legal officer. Is he here?
We have a legal officer. She's
in
not
this
here.
meeting.
She's not in this meeting. Yeah.
Yeah, you need to tell her to write a demand letter. You know, when I look at your letters, like now you've written a letter to the Chief Officer, Youth Affairs, Sports, ICT and Innovation. The letter is sounding too polite. Kindly find attached invoices for water bill under your department amounting to this. This is a follow-up of our previous correspondence, which the county has not taken. You know, it is too polite to recover anything. It should be a properly done demand letter. Then we will be satisfied that something has been done. But now when you write a letter that looks like you are begging,
Chair.
and it's your money, so no one will be bothered to pay.
Chair.
Yes.
You know, this issue is beginning to bother me seriously. And that's why I started by saying, Governor, that this is the major WSP. If you read the Water Act, WSPs were established with the mindset that they might be economically viable and therefore commercially viable, because they were not just a place for ensuring there is some form of revenue generation for the county, so that discipline is inculcated, but they are also the engine for effective and efficient water provision for the county. And if you read it with the PFM that you're talking about, which I want to take you back to, because you have to convince us that the WSP, where your non-revenue is 38%, isn't it? which if it looks against what was, and we'll get to that, Chair. I just wanted to combine this so that I can give a perspective of my argument here. If WASREB's requirement is 25, and then you say, oh, our revenue is 38, so therefore it's only 13%. It looks cool. But not until when you calculate the volume of water that you're losing against your 63 tariff, which I'd already checked when we were looking at your books, then you realize that your WSP receivables is 300 million, then it goes without saying that you must go to PFM before writing off. What does PFM say? If you read under Regulation 150, it says, Chair, and I'll read it for the governor to understand. An accounting officer may only write off losses owed to the state, and starting the state entity or the county entity, if he or she is satisfied that, number one, all reasonable steps have been taken to recover the loss and the loss is irrecoverable. In the report of the auditor, I am not seeing every effort made to recover, and the definition is that they are irrecoverable. I'm seeing these people as customers, even if they were previous in the adjunct municipalities, they are still in line with your customer base. They are still consuming your commodity. So you cannot argue the issue of recoverability. And my chair is right, because my chair is telling you that even the letters that you have written are not exhaustive. You haven't exhausted all the avenues, including legal avenues like courts, to be able to recover this money. Number two, it says, he or she is convinced that recovery of the losses will be uneconomical. In a CSP that is losing 127 million, how is 300 million uneconomical to this WSP? Even 60 million is 50% of your P&L. Because if you're losing 60 million, you want to take this 60 million out as written off, then you are saying that that money is uneconomical. It further says that he or she is convinced that it would be to the advantage of the county government entity to effect a settlement of its claim or to waive the claim. Is this to advantage, Governor? These write-offs, they are not to advantage. Now, I want to finish, Chair, with 141 of that section, which now is where I want to hold the officer on your right, Governor, to account. This is what 141.5 says. If the losses falls within the accounting officer's powers under 51 that I've just read, if they fall under him, which is what you're saying that they fall under him, he or she shall authorize the write-off of the loss up to an amount not exceeding 100,000. So expressly said, not exceeding 100,000 shillings in any one incidence, and submit a report to the county treasury and the auditor general. So for you even to attempt to waive or rather to write off 60 million is burgeoning, is an abuse of the law, because the law only gives him up to 100,000 that he can be able to write off, but it must be reported to the treasury. There is no documentation here, reported to the county treasury. Then it must also be reported to the attorney general, to the auditor general. There is none to the auditor general. So what are we doing, Governor?
Through the chair again, MD.
You want to write on this question?
Yes, I agree with Senator Eddie, because so far, with all the long-standing amounts, we've not seen any irrecoverable amounts that has been put in place. No, no recoverable, no doubtful, no age analysis. So I'm just wondering. And also there was no decision or any action of disconnection. Yeah. So I just wanted to ride on that question. I have other questions, Chair, but then I agree with Senator Eddie. Nothing has been put in place. We cannot see any recoverable amounts on this one, and we had that long outstanding trade, whatever.
And everybody, as you answer that question, you must also note that the auditor has raised another query on wage bill.
Yes.
Of 55%, which means either you are paying your people well or you have more people that you have employed. So if you are paying your people very well or you have more people you have employed, why are you not using this to get your debts paid, to recover your money? Proceed.
Chair, just to write on the questions that have been asked, I'm just wondering in my mind, why would it take 7 good years without demand letters, and then all of a sudden they want to write off the bills, and there is no sign of following for these monies to be paid? I mean, is this company making any profits? Is it worthy being there?
Okay, MD, proceed, and then members, because of time, I'll give direction so that we can focus again on payables, then we'll move to another query. Proceed.
Yeah, thank you, Chair. On the issue of the irrecoverability of the debts, most of these amounts actually is domestic, and I can confirm that there are a lot of efforts that we've done. Although maybe we've not been able to attach here because it's individual efforts, including even taking people to the courts, specific clients, those which we can be able to identify. But majority of these, like we said, is that majority of them cannot be traced, and we are in the process. And that's why we said from the Senator, the 60 million, we wrote it back because we had provided specific provision. We again wrote it back so that we can go to the specific, because we know PFM Act will not allow a general provision. We want to have specific provision on specific debts.
Why did you attempt to write it off in the first place without following the PFM provisions?
Actually, it was a provision for write-off. It was not a write-off. It's just the accounting removing it from balance sheet to P&L.
On what basis? Because it's not a P&L, it's a receivable. P&L is purely non-revenue. I mean, that's what, revenue or non-revenue, what is P&L?
Yeah.
This is an outstanding debt for whichever, even if it's 2 days. It is an asset side is why you can be able to put it. Why did you move it in your balance sheet to put it at P&L?
Yes, you know, if it's a provision for doubtful debts, you've not written them off. It's just classified to ensure that what is in the balance sheet is actually what can be recoverable.
I get that,
yeah.
But still, it is a balance sheet issue, right? Just explain to us, why did you remove it from your balance sheet to your P&L? Because you know what I'm asking. Yes. What was the instrument, legal or otherwise, or business-wise, that made you remove the 60 million from balance sheet to your P&L? Help us understand.
Yes, actually it was a not specific provision. It was a general provision.
Which one?
General provision of saying, out of all the outstanding debts, you can provide a specific amount. General provision. You've not written them off. We just provide in the books for doubtful debts.
Was there an attempt for you to, was it the governor who convinced you or somebody else who was trying to convince you to do this? Because it is illegal. You cannot say that I have got an amount in my balance sheet that over the time has been audited. The instrument I'm expecting from you is to give me, for instance, tell me that out of the 300 million that I have in my long-standing trade and receivables, okay, I am classifying the last month's sales as 60 million, okay, that one warrant to be the P&L based on my most recent accounting. So that you show me that the 60 million I denote it like it is the last, an auditor cannot be in this, right? Because if you tell me that this 60 million, I had classified it as receivables that came in the last 1 month before audit, that's when it becomes a P&L issue. But if you don't classify it and just take it randomly from balance sheet, then it can go to P&L. So what was the process that you put it as a potential P&L issue and now you're taking it back to the balance sheet? This is what is contradicting the PFM.
Chair, my follow-up question is, I've heard him say that they are trying to trace the people. Are there no deposits kept by these people? Because if one puts a deposit for water, all the details are there. And then you can follow up these people through those details.
Chair, just a quick one. So I'm just wondering, what sanctions did you put in place to the administrative or administrative actions that applied to officers responsible?
Kindly respond to all those because we are running out of time. Then I'll give direction.
Thank you, Chair. One of the strategies that we talked about is that for those ones who have long outstanding, one of the things is we want to use the deposits to knock off the long outstanding debts on the specific accounts. Then that should answer that. On administrative issues, we are actually giving ourselves targets to be able to collect. That's why I mentioned that our collection efficiency now is actually 106%. So as we go forward, we are saying we are not leaving any debts, and we are actually using disconnections. We are actually using all means to ensure that we collect.
Have you also tried to recover some of these amounts through the deposits? Are the deposits there? Are they intact?
Yes, the deposits are there. They are intact.
So have you tried to recover some of these monies through the deposits?
Yes, that is what actually we've indicated here, that we are knocking off the deposits and the debts which are outstanding.
Chair, so you're trying to say that there's no failure from the officers due to administrative?
No, I'm not saying that they were not failure, but this is a point of controls that actually we are improving on to ensure that we get it right.
Tell us about KRA. Why is it impossible for you to recover 48 million from KRA when they have already paid you 33 million? Meaning that it's possible for them to pay.
For the VAT refunds, we've been engaging KRA, doing a lot of reconciliation. That's why we've been able to break 48 million into 15 million and 33 million. 15 million is what is feasible with KRA, and 33 is on the issue of records. And in November, KRA actually wrote to us that they are coming to do a verification and an audit, probably maybe in this January and February. So we actually waiting for them to come for that audit so that we can be able to sort out this thing once and for all.
Chair, there is something here that is all combined, and I want to be very clear. Like I want to make sure that I understand this, because if you let this go, there is something fishy that's happening in governor that we must arrest in this city. Bwana MD through the governor, of course. By the time of audit of these financials, what were your approved estimates? What was your projections in terms of your revenue capacity as an entity?
1.2 billion.
1.2 billion.
Yeah.
We are together there, right? And what was the estimate that you're going to get from county government for support of whichever nature?
We didn't have any estimate from the county government. We generate our...
You generate your own. Yes. So there was not any provision for the government to give you money.
No, it was not there.
So from your estimate, what would be 1% of you are, no, that cannot be 120 million. 1% of 1.1 billion. It's 12 million, if I'm doing the math right.
Sorry, it's 12 million.
Isn't it?
Yeah.
And you said that the instrument for which you used to bring, because I was asking about a very clear question, what instrument did you use to get your 60 million out of your long-standing, or rather balance sheet, because you have balance sheet, to your P&L to clear, isn't it? So it has to have a legal instrument. And the only legal instrument that is available here is what the law says. And I want to read it for you, okay? That where you're not given the power to exceed 100,000, the legal instrument is this. And I will read for you under I think it is 141.6. It says if the loss falls within the county executive committee's members' powers under section 150, that is anything above your power now to the CEC's power of the Act, the accounting officer shall seek the approval of the county executive committee member to authorize him or her to write off the loss of an amount exceeding the 100,000, I told you, which is considered what I'm telling you now, but not exceeding 1% of the county government's entities approved estimates, excluding the county revenue fund services in any of the incidents. So you have agreed here that there was no any projection to receive from the county government. That's excluded. You have also agreed here that your projections were 1.1 billion, isn't it? Or 1.2 billion. Now, 1% of that would be 12 million. Are you getting me? We are together there. So then how did you move this up to 60 million to your P&L? And Governor, the reason I'm asking this very technical question is because if you look at your officer's response under long-standing and trade receivables, I'm looking at the number here, Chair. The highest number is actually from domestic use, which is 253 million. These are customers that can easily be manipulated in terms of collection. This is the simple people like us, Educate or some Honorable Kisang, who you know as your client in domestic use, who you can rely on in terms of collection. So either there is somebody here who is collecting this money, pocketing it, getting them out of the system, and want to write it off. This is the attempt that I have a problem with. And if he doesn't answer us correctly, then I will ask the chair to actually rein the EACC, to actually go and re-audit this in a special way, and you find that what I'm telling you is true. So what was this instrument that you used to still move this 60 million to P&L? And then now, because of what you had told me before, because it is past 1%, isn't it? We agree. 1% will be 12 million. That's the number you are told. Explain to us why this 253 million, which is domestic bank, is not being collected. What is becoming difficult? Because this is not about the system you're talking about adjunct county government, isn't it? This is domestic individuals.
Itemized and said, out of this 253, it is 120 million, and these are the list of the clients that we are unable to identify. Those are the ones now you can propose. You see, without details, you know, that's why the financial is struggling. And you had said earlier that the 60 million, it was arbitrary. You didn't base it on anything. You just said you want to write off 60 million, and then on a second thought you said it's good to itemize, and then you returned it back so that you can write off itemized receivables that you believe you cannot trace the clients. You know, it's also good to list so that you know it's very clear to the members.
Yes, proceed. Honorable members, you know, I don't know the clerk next time you are inviting this company, make sure you don't pair it up with another entity, because this is it is a big company than those other small companies we are used to. So we need to give it adequate time. So it is almost 11, and we are still on query number 1.
Yeah, this is a big one.
So, honorable members, let's manage our time. So you can respond, and then auditor, I will give direction on this. Then we move to the next query.
Thank you, Chair. I think I need to really make a clarification on the 60 million.
Yes.
If you are looking at PFM Act 1%, it's talking about write-off. This is not a write-off. It's just a provision. And I'm sure the auditor would be able to explain to us the difference between a write-off and a provision.
It's a provision of what?
Of debts,
Yeah.
of doubtful debts. That's why I'm saying in accounting, the write-off, provision for write-off is not same as write-off. You first of all provide that these debts are not likely to be collected. Then now you start a process now of writing off. That's why now you start a process of listing them down and actually proving that these debts cannot be collectible. And that's now the process that we are. So these 60 million, we've not written them off. I think that's the clarification I wanted to make. For the 253 debts on the...
MD, you are an accountant. Are you an accountant?
Yes, I am an accountant.
Okay.
For the 253 domestic debts, Senator asked, this one actually we have the list and we have different. It's just, this is just a summary of the debts and we have the list of each and every client. And for us, when we are doing the now provision and the write-off, we must demonstrate and show the list and show actually these clients are untraceable the way we've said, and it will be very clear.
Chair, I don't mean to be rude. I don't mean to be rude at all. But Chair, allow me. I would rather we finish this issue and don't solve any other issue. I wanted to go to the auditor. Our auditors are not lame. I read this report all the time. Management had written liable bad debts provision. I get what a provision is. A provision is a process towards a write-off. Are you getting me? It is a process. That's why the auditors flagged it off. And it says, you had written liable bad debts provision amounting to 60 million in the year under review, and there was no justification. That's the query. There was no justification for the write back, considering that you wrote it back. You took it back to your balance sheet. How big is your balance sheet? By the time you're doing this, how big was your balance sheet? By the time you're doing this, and so that you can understand why the auditors are bringing this as a major query. How big was your balance sheet?
4 billion.
4 billion, isn't it? So 60 million is such a sizable number for a 4 billion balance sheet. Are you getting me? So there is no way this query goes unanswered. What was your justification? A simple question. What was your justification for giving this provision of 60 million as a potential for write-off? What was your justification? And I've told you that my leader there is a senior leader. Kisang has told you that the only possible justification would be if the adjunct county government municipals were a bulk of your balance sheet, because there was some consumption was done that cannot be able to be recovered in terms of debt. But I'm telling you, it is not, because in your own response, you have indicated to us here that domestic customers were the bulk of this consumption, which was 253 million. Are you getting me? The others are even below 100 million. The other ones, like the next one is government institution, which will be the biggest justification. It is 45 million, less than the 60 million. The next one is commercial industrial customers. Yeah, commercial industrial customers, who again are not government customers. They are 1.8 billion.
The next one is water kiosks, 497,000. Schools is only 298,000. So it doesn't make any particular sense in terms of justification. So go ahead and justify to us why was it a provision in this year under review.
Yeah, so that you can also make progress, Chair, why don't maybe give the CEO opportunity, maybe say 7 days or so that he can give a proper response. Otherwise, we are not moving at all.
Okay, maybe before that, let's our budget officer make a comment.
Thank you very much, Chair. In regards to the issue under discussion raised by the Vice Chair, I agree with the Vice Chair in this way. FRS 9 discourages what we call general provisions, because these are financial instruments whereby there is a consideration that the company expects to receive cash. Then all the receivables should be categorized so that you determine what is called expected credit loss. There are those that you expect to receive within a year. There are those ones which you don't expect to receive within a year. So the amount you provide for those which are performing and those which are not performing is different. And so it is that coming up with expected credit loss that will give the correct provision to count for the debts which you believe may not be recovered. But general provisions, because that's what the senator is asking, how did you determine 60 million? Why not 40 million? Why not 30? So you need to apply the FRS 9 to enable you have various classes of your receivables. By the end of the day, you will get the correct provision for the company. Thank you.
I think I'm going to give direction that MD, together with the auditors, when you leave this place, you go and sit down. We want a more convincing and detailed response to this query. So within 7 days, you send the query, the response to the clerk. So let's proceed to the matter of non-revenue water.
Okay, thank you, Chair. Chair, allow me to go through non-revenue water and the matters was read, because members have discussed bits of them, the three queries together.
Wasreb, there was a matter, the number 10, Wasreb, that one is on wage bill.
Yes, Chair. There's some aspect that have been touched by members as they were asking queries.
We proceed.
Okay. Thank you. Non-revenue water. The statement of profit or loss and other comprehensive income reflects operating revenue amount of Kenya shillings 1,157,275,453, which includes water sales amount of Kenya shillings 841,835,286 as disclosed in Note 6A to the financial statement. Records provided for audit review indicate that the company produced a total of 15,444,959 cubic meters of water, out of which only 9,520,106 cubic meters were billed to customers. The balance of 5,922,853 cubic meters, or approximately 38 of the total volume of water produced, therefore represents non-revenue water, which was 13% or 2,026,239 cubic meters over and above the allowable loss of 25% in accordance with Schedule E of Water Service Regulatory Board guideline. The 13% in non-revenue water translate to a loss of revenue over and above the acceptable level, amounting to Kenya shilling 27,653,057 shillings, as the average tariff applied was Kenya shilling 63. In the circumstance, management was in breach of the law. Now, accumulation of WASREP subscription arrears. The statement of financial position, and as disclosed in note 36 to the financial statement, reflects trade and other payables balance of Kenya shillings 297,298,943, which includes trade payable balance of Kenya shillings 100,127,216, which further includes water service and regulatory board arrears of Kenya shillings 20,622,843, being subscription fee arrears for 7 months. Management explained that non-payment was due to prioritization of pending bills from the previous financial year ended 30th June 2024. This was contrary to Section 72 of Water Act 2016, requires all licenses to water service providers to remit regulatory levy to WASREP. In the circumstances, management was breach of the law. Non-compliance with WASREP corporate governance guideline. The statement of profit or loss and other comprehensive income reflects total expense of Kenya shillings 1,103,730,264, which includes staff cost amounting to Kenya shillings 435,659,305. General and operating expense amount of Kenya shillings 304,453,239, and maintenance expense amount of Kenya shilling 49,793, all totaling to Kenya shilling 789,906,361. However, the staff cost constitute 55% of this cost. This was contrary to Section 3.9.10 of Water Service Regulatory Board Corporate Governance Guideline 2018, which states that when fixing remuneration of staff, the total expenditure for each financial year must not exceed the benchmark set, so that personnel cost as share of operations and maintenance costs shall be maintained within the parameter of 35% of a larger company. In the circumstances, management was in breach of the law.
Your Governor, your responses to the 3 queries.
Thank you, Chair. On non-revenue water, the company non-revenue water is mainly caused by aging infrastructure, water theft, meter inaccuracy of damaged network from ongoing constructions. The company has laid the following strategies. 1. Replacement of mechanical meters with smart and smart-enabled meters. 2. Pressure monitoring and control is also being carried out in collaboration with JICA along the Chebara Optex, this being a high-pressure zone, to reduce pressure to manageable levels and frequent occurrences of bursts and leaks. The third one is that the company has also done proposal to North Water Works Development Authority to seek the funds to replace aging distribution network. Most of the pipelines in ELDOWAS service areas were done in 1960s to 1980s. Most of these pipes are prone to bursts and leakages, which accounts to more than 20% of physical losses. On accumulation of WASREP and subscription arrears, the management response is as follows: that the company experienced cash flow challenges occasioned by changes in operational cost, which increased over time with little or no changes in the revenue levels. Thus, the delay in remittance of levies such as WhatsApp subscription, the tariff suspension by the court reduced the expected revenues in the year 2024-2025. Clearance of arrears of Kenya shillings 15,982,616 was carried forward from the year 2023-2024. Was paid during the financial year 2024-2025. The arrears of the 20,622,843 have since been cleared as at 31st December 2025. And on non-compliance of there's an annexure to support that, annexure 9. On non-compliance of WhatsApp corporate governance guidelines, the following is a management response from the company, that the company implemented a new tariff from November 2024 that was supposed to enhance operation and maintenance costs, which had been constrained by the old tariff. However, it was suspended by the court in March 2025. Another ruling was made in September 2025 that allowed the company to implement the tariff. The current percentage of tariff costs O&M as at 31st December 2024 stands at 48%, and this may reduce further in subsequent years.
Auditor, your comments on the three responses?
Yeah, Chair, in regards to non-revenue water, Chair, there's a series of intervention that the company is doing, and including installation of smart meters. And for us, we will only look for the future to see whether this rate will come down, having implemented all this intervention. However, the matter has not been addressed because what we are reporting in the audit report still remains the same. And in regards to accumulation of WhatsApp subscription arrears, the matter has since been addressed, because now we were able to confirm that this 20,622,843 was actually paid in December. And the matter for non-compliance with WhatsApp corporate governance guidelines, Chair, the rulings in court and the subsequent uplifting, those documentation were not provided, and we still feel this matter has not been addressed.
Very well. So maybe you can, members, you can ask questions on those three queries. Mine to the governor, which can also be answered by the MD. In your response, you have indicated that 20% of the losses are physical losses, which means the balance of about 18% is commercial losses. But in your intervention, you have not addressed how you are going to deal with the 18% loss, commercial loss. So maybe you can tell us more about that.
So, MD.
Thank you, Chair. Like we've identified, 20% is physical losses. The 18%, what we are doing is that we've increased on the surveillance. We have a team that does surveillance on issues of the illegal connection. We are also implementing the new tariff, which has penalties, FT penalties for illegal connection, which if somebody is a domestic client, if they are found with illegal connection, they are charged a penalty of 30,000. And for a commercial client, they are charged a penalty of 100,000. And this actually we've been implemented, and we are seeing it is part of the issues that is reducing on the non-revenue water.
Maybe you talk about the billing. You remember the first query was talking about irregularity in water revenues, which the auditor, you said it had been sorted out, but you see that is also a pointer that something may not be right about the billing. The losses that are artificial but coming through the billing processes. What do you have to say about the billing in relation to query number 1?
Yes, on billing, actually we had some of the losses was through the billing, and was caused mainly by the inaccurate meters that we had. The meters were over, some of them were even over 7 years in operation. But now what we've done, we've replaced the meters. We have a connection of almost 80,000, and currently we've replaced the 50,000 meters. So this definitely is reducing on this NRW and in actually the billing processes.
Let's have Mbugua first, because he had...
Thank you, Chair. Governor, I don't know whether you had sat down with your team when they were coming here, and they actually explained to you what this response means and what the auditors had raised. To put it in perspective, if you take the volume which is lost and you apply the rate which is charged, it means the company is losing 373 million shillings in a year, which translates to over 1 million shillings a day. Meaning, as the manager and his team were preparing from yesterday to come and attend this session and probably go back tomorrow, the company has lost 3 million shillings just within those 3 days. So the response the management is giving is not adequate, and it is not showing that the company is serious in addressing this issue. And the governor, you need to explain more on this, because if it continues like this, next year you will come the same scenario. The people of Eldoret are not getting value for money in whatever is being put in this company. I think the team is not serious, Governor.
Yes, Senator.
Chair, I've got 2 concerns because I know I'm supposed to be chairing the other meeting in respect to the governor for, I think, Nyeri. My first question to the governor, I will start with a non-compliance issue. Governor, this is a compliance issue that and again, our auditors have told you that the auditors are some of the smartest. They have followed the auditors for long. They audit over 12,000 institutions in a year. And when I read their report and analyze them, I find them to be extremely, extremely well put. Governor, may you tell me, or tell the committee, what is the relevance of your response to query number 10?
Chair, let me give the MD too.
Because query number 10 has asked about a compliance issue on the amount of money you can spend in your variable cost, right, and your current on staffing vis-a-vis other O&M. What is the relevance of the tariff on that response?
MD, please.
Thank you, Chair. The issue actually is non-compliance with the WASREP corporate governance on staff cost.
Yes.
And you're saying, as at the time of audit, we were 55%. The required is 35%.
No, your response. Your response is that this you did because the tariff had done what?
Yes, that's where I'm going.
Yes.
The response is that this is the operation and maintenance cost depends on the cash flow that we receive.
No, it doesn't. It's a compliance issue.
Yes, it's a compliance issue.
It doesn't depend on your cost, whatever. It depends on the law. That's why the auditor said, in the circumstances, therefore, management was in breach of the law. Where is the CC finance? It's there, right? Let's go to PFM. Where because WASREP emanates from the Constitution, and it earns the higher national laws, which our national law on limitations is the issue of the PFM. If you look at the order of how laws are written. So, for instance, if you write a law in the county assembly, and there's a national law that contradicts it, the president would be the national law will supersede the county law, isn't it? So let's go to PFM and what the PFM tells us. Where the auditors are coming with this, even before you get to WASREP. Look at PFM, okay, 107. Because this is not an issue. It's not an issue that if my revenues are doing well, then I can do this and this is what I want. No, it's about compliance to what the law says. This is what the law says, Chair. County Treasury to enforce fiscal responsibilities principles. Okay? And it says, in the management of the county government's public finances, the county treasury shall enforce the following fiscal responsibilities. The county government's recurrent expenditure shall not exceed the county government's total revenue. Over the medium term, a minimum of 30% of the county government's budget shall be allocated to the development of expenditure. I'm looking for something here. The county government's expenditure on wages and benefits, okay, for its public officers shall not exceed a percentage of the county government's total revenue as prescribed by the executive member of finance for finance in regulations and approved by the county assembly. Okay? Then it goes to the regulations and gives you a very specific direction on CEC. And this is what is the same regulations of the PFM Part 3, County Fiscal Strategy. It says the executive committee member with approval of the county assembly shall set a limit on the county government's expenditure on wages and benefits for its public officers pursuant to the section that I have just read. So the answer here has got nothing to do with tariff, has got nothing to do with P&L. It simply has something to do with the compliance with the law. And Chair, on this, I think you should just either choose to take action on the law that has been breached, or otherwise, if you are lenient today, just ask them to go and comply with the law. Because these are an irrelevant answer to this question. It's a compliance issue, and there is PFM regulation, and my guarantee to you, Governor, is that you take interest in this company because it looks like there are legal issues that are not being followed here. Tariff has nothing to do with this. You cannot say that because we're going to set out the right tariff today, I'm going to break the law, hoping that when we pass the right tariff, I'll correct the rot. That's what you're saying with that response. That our revenues are not making sense at this moment. Let us just break this law and go above the limit. Then in future, when you get the money, you'll have broken the law, my friend. Non-revenue would be this, Governor. Of the 5.9 million meter cubic of water that you lost, which comprises the amount of money that my friend Senator Mbugwa said was lost. Governor, your MD has alluded this to physical losses, predominantly. Can you tell us, of the 5.9 million meter cubics, how many, what volume was lost as a result of commercial losses, and what volume was lost as a result of physical losses? Yes, I have that data said unanswered. That out of the amount of water that was lost, 5.9 billion non-revenue water, what constituted physical losses and what constituted the commercial losses?
Thank you, Chair. The MD is responsible.
And then after that, we're going to give direction because we have run out of time.
Thank you, Chair. To answer the first one on the non-compliance, yes. That can support the operations of the company is constant, and that's why the wage bill is at that amount. What we were saying in our response is that we are actually looking at improving the operational efficiency so that we can be able to improve on the revenue to be able to reduce that percentage. Because for the operations of the company to run and for us to be able to provide quality water and quality service to the residents, the establishment is the way it is. And we are saying the alternative of sorting out this is to be able to improve on the efficiencies, including reducing non-revenue water, and also improving on the efficiencies of running the company. So that
but MD, compliance is compliance. If the law today says that there shall be 40 MCS in Migori County, would I go and acquire another entity of 41 MCS? Even if I project that in the next few years counties will get more money. Where is the CC of finance? Did you put limit to all these entities on what they are supposed to be able to have as expenditure on their O&M on staff?
Honorable Chair, we have, as per the PFM, we have limits for all the fiscal responsibilities.
Yes.
Yes.
If you have the limits,
Yeah, yes.
and the MD is arguing with us that those limits can be passed as long as it projects some money in the future. Do you agree with him?
Honorable Chair, I think it is an issue of compliance.
Yes.
So the law requires that we need to be below 35.
So why was the law broken on this? Under your watch?
I think this is an historical challenge, Honorable Chair. I'm not giving an excuse.
It's not an historical challenge, it's the year under review. This is the year under review. How long have you been the MD?
1 year.
1 year. So it's the year under review.
Okay. Allow me, Chair, to be able to talk about the historical. This figure, if I know the figures we can be able to get from the auditor. 3 years ago, it was 65%. Last year, under review is 55%. As we speak now, we are talking about 47%. So management is working to ensure that we actually meet the law.
So you want this committee to continue allowing you to break the law and continue exceeding?
No.
So what is your commitment now?
That actually we will comply with the law.
Chair. Chair, staffing can never be an historical issue because they retire also, they leave and you employ more. Two, I want to know if this county has a county attorney, and if he's here, he explains why he's not checking on the law and advising accordingly, because that is the work of the county attorney. Through Chair and through the Governor.
Chair, let the county attorney respond on the same.
Thank you, Chair. On that question about legal compliance, we always advise all departments to comply with the law. So our role is basically advisory, and we have always done the advice to the departments.
But you see now, county attorney, you don't just advise. You need to be looking at the reports like Auditor General reports.
Yes.
So that where there is violation, you take it up and recommend steps to heal that violation.
I think we've, on the issue of staffing, as explained by the MD, some of the staffing issues have some challenges, which progressively we have been asking the companies and the county government to continue complying. Yes. At times also, at the time when the county government came into place, there were also other legal requirements for compliance with the constitution that have also tilted the issue of staffing, because we need to comply with the requirements to ensure there is gender compliance with people living with disabilities and the other issues. So but progressively, we are doing progress on the issue here, and we'll continue to ensure we comply here.
But Chair, like the response that has just been given and written here. Surely, do you check the responses even before they appear here? Because that is your work. I mean, this is coming to shame the governor here with such responses, which are not the responses to the question.
I think, Bwana MD, you seem to me to be a very competent person who understands his job. But I think you can do more. You can do more than what you are doing. So my recommendation is that you try the issue of wage bill. You know how it can be sorted? Just enhance your revenue by ensuring that non-revenue water is managed. Because your company is big. 38% non-revenue water is so much that has been lost. So if we can deal with that, then your revenues will go up, and hence your wage bill figure will go down. And then you enhance recovery of your receivables. So I think one of the take home from this meeting is that we want you to work hard on the receivables. You work hard on fixing the commercial losses. Commercial losses in non-revenue water, and that will help you deal with the issue of 55% wage bill. Auditor, I am a strong defender of devolution, and I'm one of the people who question WASIREP. Why would a national regulator be funded by county governments? You see this query of 20 million shillings that is to be paid to WASIREP. I think that is one issue that this Senate is dealing with, so that all these national regulators, WERMA, WASIREP, eating into our little revenue in counties, and yet they are national regulators. I think it's something that even you people as auditors must raise a query on. So whereas the law now, the regulations of WASIREP allow them to pay, but the constitution outweighs the regulation. Why would the counties continue funding national regulators? Legal, your comment on that?
Chair, I think I'll just echo your sentiments on the distinction that these are two distinct governments.
Yeah.
Therefore, having one government funding the other,
Yeah.
I don't think that is in the spirit or letter of the Constitution, Chair.
Yeah, so we must really look at these national regulators, WERMA, we have even National Construction Authority and many others. Why should counties continue funding them and they are national entities?
Yeah, Chair, maybe I'll just put a rejoinder. It is true that sometimes as auditor we are also conflicted. Like on Wednesday we did discuss Kapsabet county referral, and you are aware there's this FIF, Facility Improvement Fund, that the act is a national act, and county facilities are expected to follow that act. And during the audit, I was just wondering why the facilities were following the national act, and yet counties had not operationalized their own FIF acts. So sometimes we also found in a situation that we are really not. But I'm happy that, Chair, you are now taking it up, because you are the house that can make amendments, can go and table it into the Parliament, and then all these things can now be streamlined. My presentation.
Okay, so we are going to the last query, but it is too long. I would like you just to summarize it. This one on project verification, work in progress. So you can read the first paragraph, and then the others you just read out the projects. And then the governor will respond why we have had delayed implementation of those projects. Proceed.
Thank you. Paragraph 4. Verification of projects, work in progress. Statement of financial position reflect property, plant and equipment balance of 3,6,885,996, which includes work in progress amount of 81,812,423 as reflected in note 19 and appendices 20 to the financial statement. Verification of work in progress amount of 81,812,423 revealed the following issues. First, there's delay completion of Huruma water project. There's also delayed completion of Kempi Kartasi sewer project, delayed completion of Mailinane water rehabilitation project, delayed completion of Rescos ASK ward sewer project, delayed completion of Kipkenyo sewer phase 2 project, delayed completion of Langas water rehabilitation project, delayed completion of Langas water sewer project phase 5. I think that is the final one. Chair.
Okay, so Governor, in the same light, I know your response, the table is too long. I just want you to explain why these projects have delayed.
Thank you, Chair. Let me look at Kampi Kartasi. It is not Kampi Kartasi. It's an estate in Eldoret, and the one for Mailine, because these are affected by the KISIP project, which is ongoing right now. The project delay is attributed to delays by the KISIP contractor in completing activities on site, which lies on the areas of the project implementation. This restricted working place planning to complete the project before the end of 2025-2026 financial year is ongoing. Likewise to Mailine, and of course Langas. Even Langas have the same problem. And I think Langas is somewhere there. And then that is also because of KISIP. So these are a very big project that is going on. It has affected the entire estate, the 3 estates, and some bit of Huruma.
So when are they going to be fully complete, all the projects?
We expect the project to be completed end of 2025-2026 financial year. That's it. Around June.
This year?
Yes.
Okay.
Only 2 projects are not completed. MD, can you explain that?
Yeah. Chair, out of these projects, as we speak, all the projects now are complete except only 2 that we expect to complete before the end of this financial year.
Members, any question on that? Yes,
Yes, Chair. I think the management should have been more serious in responding to this. For example, item number 2, delayed completion of Huruma. The auditor says the approved budget was 867,028, and you have used 8113. You should have maybe given us the procurement documents to show what the award was, because there appear to be inconsistency. On this other one, on the delayed completion of Rangas, the auditor is saying that you've already almost paid 100% and the project is not yet complete. So your answer is not comprehensive on IMD. We needed more information on this. Remember, there is John White notice sits here. He picked some of these things because there appear to be some loss of money.
quickly, Chair, allow me to give the MD to respond to that.
MD.
Thank you, Chair. Most of these projects actually is within the set budgets. The issue that the auditor raised is because of the time. Because when we're starting this project, we tell ourselves that this project will be 4 months. But you find that it goes beyond. And the reason that we've explained here is that some of the time, when you go to the ground, you find that there are some challenges which was not foreseen before. So that's actually what made this delayed on the project. And in our response, we say that going forward, all these projects will be doing a feasibility study before we actually even do the budgeting, so that we can be able to capture all the challenges that actually are there.
So you have given us a date of June this year. We'll come on the ground to verify this. So, honorable members, I think we end our examination at that point.
Chair, before you end, can I hear something about PWDs, or was it handled when I was not away? Non-compliance with PWDs.
There is a response there. We are trying to finish so that we can invite Nyeri to come in.
Let them just respond
We have
to
run
that,
out
Chair.
of time.
It's on page 15.
Say something about PWDs.
MD, please.
Yes, currently we are not compliant on that. We are actually at 1.7% on the compliance on the People with Disabilities Act. Management is actually doing all the efforts and giving equal opportunity, especially encouraging the PWDs to apply for any vacancies that arises. But so far we have 10 staff out of all 400 staff who are people with a disability.
You have 10 of them who are people living with disability.
Yes.
How do you advertise? I mean, because maybe some of them cannot access the ways you advertise. Do you go to the local radio station, or how do you advertise it? And is it a challenge? Because it's a challenge across the counties, and I keep on wondering if there are no PWDs in the counties. And if they are not there, then you can borrow from the neighboring county. Because PWDs really suffer. Even the work that the projects and what they should be doing, not even being employed, but like applying for tenders and what have you. And you'll find tenders being done by normal people, and they are writing like they are PWDs in the counties, and that's very wrong, Chair. This is something we should really look on, because these are people who cannot defend themselves, and normal people are taking their jobs and doing their jobs when they are there, and they are suffering, and they are human beings, like any other human being.
Maybe,
So
Chair,
maybe do something about it.
through Chair, Senator, I would advise that you visit us and see how we do this, because even in the county government or headquarters, we have about 20 deaf people who work around there, cleaning the offices and the premises, and for sure we have complied. I would wish that you visit us.
It's a query here. If you had complied, this query could not be here.
Okay.
I think that's well noted. I just want to give direction that we will not be able to cover the city of Eldoret today because of time. I think that's why I said, Clark, you are not supposed to pair ELDOWAS with any other entity, because it's a big company that requires a lot of time for us to deal with. So we are sorry for that, Governor, but we will schedule another date for city of Eldoret together with maybe hospitals. How many hospitals are audited? Auditor.
Chair, there are currently several. I would talk of around 5.
5?
Yes.
So even that we can't maybe we'll pair this with the funds.
Chair, the municipality, we only have 2 queries. If you spare 10 minutes.
I have looked at the municipality, and there are issues there which are beyond just those 2 queries.
Okay.
Yeah.
Thank you, Chair.
Look at your report, the one you have given me.
Yeah.
I think when I study that and Eddie comes in here, we will take another 1 hour. And Nyeri is waiting to come in. So I think let's just pair it. We'll we have the written responses. We'll keep them. You will not need to write another responses, Governor, because we already have the responses. So they will only come in to respond to the queries. So we will pair it with the other entities when they come. So thank you very much, Governor. Maybe you can make your final comments.
Thank you, Chair. I would have wished that we completed the city one, but because you've been kind to us, especially when you take written responses, I have become very happy because those things are there. I want to say we have learned a lot when we interact in such a forum, and I'm still happy that you visited our county last time on Moisoi, on investment committee, and we are expecting things to happen, but we are yet to see. You mentioned of ESCC because we thought the kind of money that has been put there does not look like what we saw. What we call because there was a lot of money which has been used, and we don't see the value for money. So I thought, Chair, you still follow up with that one because it's a very big issue in the village, and 2027 is coming very fast, and there is a term they are using 1 term or 2 terms, so I would wish to be the 2 terms. So when you come in, you will be able to help us. Nonetheless, I think as a committee, as a county government and the ELDOWAS, we are learning a lot. I would suggest again going future because it will be easy for you to do a seminar for us, especially the people who are concerned with this. We provide a day, we facilitate, then you come as a committee to come and explain to us quite a number of things. We will not be repeating the same mistakes every year, prior year. We will be able to, to sort it out. So I would suggest that going to the future, please, you can provide some programs where you can come down to us, because it's devolution. Devolution is going down to the people. You come and train us here and there for us to become really compliant in all these things. Otherwise, thank you, Chair. We are very happy wherever we appear here.
Thank you very much, Governor and your team. As you are aware, we are on a crash program to complete the audited reports examination by 31st of March, and this is in compliance with the High Court ruling that Senate and the National Assembly must comply with Article 229 of the Constitution. So when you see we are rushing you and maybe inviting you, we will invite you 3 times within this short period. We are trying to comply with that rule, and I hope that once National Assembly complies, then your shareable revenues are going to go up, because they will be based on the latest audited reports, which is the current report. So I think it's good to support us as COG, even as we work hard to try to clear. So thank you very much. I have noticed that the number of queries for this company have reduced compared to when we started. But those other things members have been trying to push. Bwana MD, if you do something about them, then we are going to see this company improve and become better than it is now. Thank you very much. Safari njema kwenda Eldoret. Asante.